Hey, good evening, everyone. Good evening. Good evening, Jasmine. Good
Good
evening,
evening,
Malika.
Professor.
Good
Good evening,
evening.
Professor.
Good evening. Only two people. It's just 6:01, so we'll just give it a few minutes for the rest of the class. Um, I don't know because it's the last day, and I don't know how many people would be joining. And since we are going to do actually do it on Excel, in other words, run the regression to find beta and actually run CAPM, right? So looks like yeah, one more person, right? Coral. Hello, Coral. How are you? Well, yeah. I hope you are having a great evening. Um, all right. So I guess the rest of the class will join as we go on. So today, actually, I did. Okay. Oh, I'm not sharing anything yet. So let me share my screen. All right. So now, I actually went ahead and okay, uh, did this yesterday. So we're gonna do this now. So what we're gonna do today is first, we're gonna have to go and get S&P 500 data, right? And uh, extract the data that we only need, and then we plot it. We will, put Apple's data, returns data, and S&P 500 returns data side by side, and run regression, and which will give us the beta and alpha, right? And we can plot that. We can, plot those, scatter, right? Scatter plot, right? And then find the trend line, and also equation of the trend line is, the parameters of equations of the trend line is already, and actually, you will see exactly the same thing here, and same R square, and so on. Okay, and then, to find required return using CAPM, right? This is CAPM, right? We need T-bill data. We're gonna go get the T-bill data. Um, a lot of things to do. Uh, so we got really, exciting exercise, right? And I don't know how many of you have. Oh, as of my last check, I saw there were like at least like 6 people who have already submitted files. But don't forget, if you haven't done it yet, uh, it's due 11:59 tonight, and there can be no extension or no late submission for final because everything has to be, all the data must be compiled all together and processed together to calculate your grade. Um, and I have, it's very urgent. All right, so let's go ahead and, so you please open this file that you worked on last time, right? We did, remember the apple, right? So we're gonna keep adding to, uh, we're gonna keep adding to uh, the data to this file. So please open it, right? Please open it. Okay. So now what we're going to do is we're going to go to uh, S&P 500, right? We're going to, and I already, if you go to Yahoo Finance, right, and type here S&P 500, right? And interestingly, the ticker symbol for S&P 500 is uh, caret. This sign is called caret. The symbol GSPC, right? SP, S&P, Standard and Poor's. And you will, the basic, okay, so just to, okay, um, I have S&P 500. Okay, so did everyone get to S&P 500? Please confirm. You can say yes or I. All right, Zainab, only one person. Okay, Malaysia, all right, two, only two. How about the rest of the class? So if you're there, you know where to go, right? All right, Jasmine. Um, click on historical data. And when you are there, we'll need to change it to monthly because it has to uh, it has to comply with it has to concur with the Apple's data we've got. And we downloaded monthly, right? Monthly price. So we're gonna click on monthly, and then we go back 5 years. So we'll go back to July 2018. And starting from July 1st. Okay. Now, once again, it will be all, end of the month data. You click on done. Okay. Now we apply. Now everything is, monthly, right? Now the problem is now we need to download, but it doesn't have any download button. Doesn't have a download button. So what do we do then? It doesn't show any download button. So what we do is we're gonna just highlight. Make sure only the data are highlighted, not the side panel, not the ads in the side panel. So if it is all highlighted like this, you can right-click the mouse, right-click your mouse button, and click copy, right? And in the you can open, right, using this tab, right? So yeah, using this, you can open another, right? And I'm not. I'm going to open a completely new. I'm going to open a completely new file because now new worksheet, blank worksheet, because it's all currently too many. I've too many worksheets open. So select, if you select this first cell, A1, right, and click Home and paste. Now all of those, data will be pasted there. And as I said, now working with very small font is not very good for your vision, right? And normally I would change the font. So click here, right? Click this corner. The entire worksheet will be highlighted. Select Home and select your favorite font, right? For me, Bakersville it's not necessarily my favorite, but I don't have to scroll down a lot. It's right there, so I don't have to scroll down all the way to the bottom. And then for font size, I will increase it to size 14. Okay. Now, so I have downloaded S&P 500. The S&P 500 an index. S&P 500 is an index, so it's not actual price, but it works just like the price, right? When S&P 500, obviously, 4,450, 4,588 is a higher price than 4,450, right? Now, I'm not gonna use it as is. I'm gonna extract only the ones that I need. So double right click on the bottom tab. If you right click on the bottom tab, you can rename it. So just for later, right? Just as a for your own reference, you will name it S&P. Yeah, usually S&P 500. I would call it, raw data, raw. Okay, S&P 500 raw. And then I'm gonna highlight everything, right? Click here, highlight everything, and copy, and open the next worksheet. Open another one, and then paste, right? However, this time, I don't need high-low, open high-low, right? Just like what we did with Apple. Delete those. I will leave everything else. I will clean out everything else. I will delete everything else except the close price. Okay. Okay. And this, I will call it PM. Market price, right? Market price. Now let's find, and RM, market return, right? RM stands for market return, of course. And I'm gonna underline it, center. Normally I use, a lowercase, but let's make it, uppercase. Okay. Now, and everything is already sorted in descending order, right? Sorted in descending order. So now all you need to do is, okay, to find return, minus this, or this. There you go. Now I want to turn it into percentage. So give it percentage and give it at least 2 decimal places or 3 decimal places. Let me give it 3 decimal places. Okay. And now all you need to do is just copy and drag, right? Drag, copy and drag all the way down. Okay. You can't go any further than, because you can't do it here because there's no price data anymore, right? Any questions so far? Any questions? Any questions? No? Okay. Okay. All righty. Now we're gonna then we will need to put it side by side with Apple's return, right? So so this is what I got, right? So this number is slightly different because I did it yesterday. This is yesterday's number based on yesterday's S&P 500. So obviously it would be slightly different. And then, so from the Apple's data that you worked on last time, right? I'm gonna copy Apple's price and returns data, and then you open another worksheet, and here you paste. Okay. Now, so here I'm gonna label this worksheet S&P 500 return. Okay. Now this is then I will, and here one more thing. I'm gonna copy this, right? Select this column, copy and paste, but this time value only, right? That's value only. Now let's see. Okay. So it's value only. So I can delete this column, right? Because if it is not value, obviously, when I delete it, then it's going to change because it's pointing to column. It used to be pointing to column B. Now, so we know this is Apple. Now we're going to highlight this. I'm going to highlight these 3 columns all together first. Copy. And bring it here. Paste. And make sure your dates are all matching. Something's not right. The why is this all? Date. Why is the date all okay? So I guess I can. something went wrong when I, okay. But we know dates are matching, but and this one, I'm gonna have to delete this, but before I delete that, I will need to make sure that this will be just the values, because if I delete this, and while column E contains formula, if I delete this, this will be all messed up. So, oops, I'm gonna do one more, copy, and go to paste and value only, right? Paste value only. There you go. So everything is just the value, right? Now I can delete this and delete again, or delete column C, or just move that to column D to column C. And you might see something like this. That just means the column is not wide enough to show all the number there. So all you need to do is bring your cursor here, bring it right on the border between the column label C and column label D, and double click, and it's going to automatically adjust the column width. Excuse me. Now, so I need only 60 data points. Having additional one more data point, it doesn't hurt, but it's gonna get in the way later on. So and we are missing nothing by getting rid of this. So I'll get rid of that. I'll get rid of that too. So we have total of 60 data points, right? Each column, right? 60 rows by one column, right? 60 data points. Now, why did I do this? Because I'm now going to run a regression of Apple's return or market return. But to run a regression, you need to activate or invoke a feature that is routinely dormant in Excel, because we're gonna need to use data functions, and we need something called data analysis. Data analysis, but you won't see that. Does anyone see this in the data ribbon? This is called ribbon. Does anyone see this in the data ribbon? Anyone? Now you need to tell me. Do you have this in your data ribbon? No? I don't think you confirm. Oh, you have it? Malaysia, you have this data analysis, I don't know what, the block, data analysis block in the, huh? Okay, Jasmine, you do not. Okay. I mean, Malaysia, if you have it, wonderful. That's great. So you have used it before. That means, and Jasmine, that would be very normal. Anybody, Coral, do you have this plot or this patch? Hmm? Oh yeah, no. Zainab, so I don't have to ask anymore. Brandon, do you have this patch? Most likely no. So how do you invoke or how do you activate it? Okay, so look, watch carefully. Go to files, and then go down to usually I would say option here, more. And we click on more. You see options. Click on options. And then it's gonna, you see general formula data, blah, blah, blah. Now you, towards the bottom, you will see add ins. Add ins. And click on add ins. And then, now, yeah, you will see add ins. So in the add ins, you will need to select Analysis Toolpack VBA, right? Need to select this. Solver add-in. We'll do it later, but at least this. Usually it comes in a pack. You can select all together. I normally, but if you cannot select them simultaneously, that's fine. Just, or Excel add-ins. Select Analysis Toolpack. And later, if you can add in only one after another, one by one, later also add in solver, right? But at least you should have Analysis Toolpack, and hit OK. Hit OK, right? And then it's going to automatically activate it. So after that, if you click on data, you will see this patch there. Now, do you see it there, everyone? Do you see it? Okay, great. And how about the rest of the class? Okay, Jasmine, good. How about you, Coral? Do you have it there? Great. Zainab, you have it there now? Do you have it there now? Zainab? Brandon, do you have it there now? Brandon? Okay, Zainab. Alejandra, you have it there now? I'll have to assume you are there and you have it. Otherwise, okay, very good. Now we can run regression. First, we can run regression as is, but in my original work, I changed the name. I changed the label to X, Y, and X, but that's fine. I mean, you can rename it to Y, and but the idea is Apple's return is Y variable, right? And market return is X variable. Okay, you just need to keep that in mind. And then now we're gonna click on data and click on data analysis. Okay. Now then this dialog box opens. Now you scroll down until you find regression. You see regression there? Okay, select it, click OK. Then it's asking input Y range. This is Y. So you're gonna click that, select. You can select the label. That's okay. I mean, we just tell it that there is label. And so it will be 61 rows by 1 column. And then input X range. This is X. include the label. There you go. And you just tell it, labels are there, labels. Now we're gonna select the output range, So output range, I normally use the, next, not the right next column, but leave one gap, leave a space, one column space, and so I'm going to put it in E1. So select E1, and then that's it. Nothing further, and then hit OK. Now instantaneously, you have the regression result, summary output. So currently, this whole area is highlighted. So I'm gonna, while it is highlighted, I'm gonna give it borderline, thick borderline, and change the font. Increase the font like this. Okay. So literally, this is summary output. And what is this telling you? Let me increase a couple of things. Look, if you want to see the label completely, you're going to double click on this. But however, because this title is put into one single cell, it's going to stretch this column E too much. So what I'm going to do is I'm going to highlight these two cells, and what I'm going to do is merge. I'm going to merge those two cells. So E1 and F1 are merged as one cell. Now, if you double click on it, now this column E is much, more much better. Why is R square is very low? That's something's not right. R square is very low. Something's not right. Something's not right. Let me make sure if I have correct data. I will label this, rename this Apple versus Epic. Now the thing is, I don't trust this result because something is wrong. Because my original result, yeah, R square is 0.58, and coefficients are correct. Coefficients are like intercept. Alpha is x. In other words, coefficient of x. In other words, beta is 1.28. T statistics are very meaningful, very significant. However, this one is totally wrong. So maybe I'll need to run this again. Okay, let me run this again. Let me just compare first. Let me compare my original data with just for comparison with this. So something's not. Yeah, this one is not right. Why? Oh, okay. So I must have. I see what I copied. No wonder why the dates were wrong. It looks like I copied instead of copying this, instead of copying this, I copied this. No wonder. So all I need to do is then I'm gonna copy this. Yeah, remember when I deleted, the uh, when I copied, market return with the date, the original date that I copied from Apple's data was all wrong. So that was why. Okay, so now, let's run the regression again. Let's run the regression again. Okay, so we're gonna go back to our data analysis. My computer is slowing down somehow. Okay, now regression. Hit OK. All you need to do is change the Y, right? Input Y range. There you go. So leave everything alone. It's only you hit OK. It will say it just says this because there is something already in the area, right, where it's going to be copied into, where it's going to be printed. You hit OK. Now the numbers look much better now. Again, I'm going to put a thick border line around it, and then increase the font and change the font style to something that I like. Okay, now it looks much better. Okay, so R square, I'm gonna explain to you. Now, what is this? This is the coefficient of market return. In other words, coefficient of x value, x variables. So this is beta value. And this is intercept, so that's alpha. So these two coefficients, right? I'm going to highlight them because uh, this gives you the characteristics of the trend line. Okay? In other words, this tells you this is what tells you, right? Apple's return is alpha intercept, right? Plus beta times market return. And this is alpha. This is beta. Okay? Now, next question is, you need to check their t-statistics. T-statistics means it's basically a measure that tells how robust this estimate is, right? Because um, uh, statistically, it is basically saying that null hypothesis can be rejected very strongly. In other words, um, this estimate could be just a fluke, right? It could be a fluke. It could be just, by pure chance that this happened. However, so in the true estimate could be no different from zero. That's the null hypothesis. But whether you reject null hypothesis or accept null hypothesis depends on the t value. If t value is greater than 2, or close to 2, or greater than 2, then you reject the null hypothesis. Because null hypothesis, that means, this type of estimate has a very, very low probability of happening, right? That's what the t-value is telling you, right? And think about it. This is like, minus 12 means, you have 0.0012 zeros, right? And 13027. It has such a low probability. It has such a low probability, right? That the null hypothesis is true. That, null hypothesis is what? This estimate is 0. It has this low probability that the true estimate is 0. So it has very low probability of this happening. So t-value is very high. If it is 2, that means this is something that can happen only around 2 standard deviation around the mean. That's what it means. Now, this alpha value, it is not 2, but it's not insignificant. It is, like almost 1.6. It's close to 2. I mean, it's kind of significant. So this is a very this is a robust. This is a robust estimate. It's a good estimate. What is R square? R square means, goodness of fit. It means with this apples return and market return, we plotted those coordinates. And the trend line between apples return and market return, we identified this correlation and intercept. So R square, that means, not all the scatter plots can fall neatly on this line. However, about 60%, 58% falls on this line. In other words, you can predict apples return when we know this beta, alpha, and when market return is given, right? almost 60% is explained. That's what it means. So let me show you what it means, actually. Let me show you what it means. So but first, everyone got the same result? Everyone got the same result? Please confirm. Quiet. Okay, Jasmine, good, very good. You got the same result. What about other people? Coral, you got the same result? Zainab, good. Okay, Malaysia, very good, very good. So, Alejandra, Brandon, did you guys get the same result? If you didn't, and if you have any questions, please ask now. All right. Now, so we're gonna move on. So let's graph it. Let's graph it, right? So here, I'm going to highlight these two columns, B and C, right? Okay. And then, so highlight, and then insert, go to insert, and then charts, and we're gonna select scatter plot. So chart, this is scatter, right? Just scatter, right? Okay. Now we're gonna have to move it. You're gonna have to drag it. Yeah. You're gonna have to move it down somewhere down here, and you can make it. You can make it bigger. You should make it bigger actually. I'm gonna by dragging the corner. Right? I guess this is good. Okay. Now, and the thing is, the problem is now it's switched. Actually, the way it is understanding it is this is y and this is x, right? However, this is y. Apple's return is y. And market return is x. So we're going to switch that. So how do we do that? Just right click on one of these plots, right click on one of those dots, and then click select data. Select data. Okay. Now you can switch row column. Yes, switch row column. No, don't do that. First, chart. This is okay. Edit. Series name is not what we want the series name to be is Apple. So the wrong cell was selected. So you're gonna select B1, right? X, currently this is selected as X. So you only need to select this X, right? Just highlight column C. That's X. Series Y values. This is Y. So you're gonna highlight that, right? And hit OK. Hit OK. Now everything has now changed, right? chart title is now RT, which is Apple. Now you can, first of all, I normally do first, I'm gonna select the label, axis label first, y-axis label, and then font. I'm gonna change the font to 12. Something that would look, I mean, we have, a large space, and change the font to Bakersville, because as I said, it's always Baskerville. Okay, that's my favorite font. What happened? Didn't change? Yeah, now it changed. Horizontal axis 2. I'm going to change the font. Bakersville or Baskerville. 12. Hit OK. Didn't. Now. Okay. You might wonder, is that very important? No, it's not that important. But what looks more aesthetically appealing is easier to read, and also horizontal axis. I'm gonna go to like format axis, I guess. Format axis. Maybe it's this one. I believe it's this one. Alignment. It's vertical alignment, middle center. Okay. Custom angle. I'm gonna give it angle, so it will be easier to read. I'm gonna give it like minus 45 degrees, so it will be like diagonal, which would be easier to read. And then, okay, and this, even this, I'll change the font. Also, Bakersville, I'm gonna make it 18, size 18. Hit OK. All right, and even make it bold. So it's very clear that this is the plot of Apple's return at time t, right? Now, next, you see there's a trend, clearly, right? It's a positive trend, right? Upsloping. Nobody would see a negative trend here, right? It's a positive trend. So we want to draw this regression line or trend line. So select one of those dots, right click, and then add trend line. Okay, linear trend line, and you want to display equation on chart, display R square on the chart. So we will confirm, right? And then let's change, was it still this? Maybe this. Yeah. Now, trend line is currently very flimsy, very puny and flimsy. So we're going to accentuate it. I'm going to give it red color and give it like 4 point, okay, 6 point is good. It looks good. 6 point. Um, Width and dash solid line. No, solid line, solid. Why is it not dash type? Okay. Yeah. Oh, that looks too thick. Maybe 5 is fine, or 4.75. And then let's give it arrowhead. But we don't need. This is the beginning. This is the end. We'll just give end the arrow. So stealth arrow. This looks good. So I'll give it. Why isn't it end arrow type? Hmm. I don't know why it's not. Yeah. Okay, something is not okay. I can maybe. Come on. All right, if it is not in my, usually it's working, but um I can take care of it later. Tab type. Tab. Okay, never mind. It doesn't. And this one now, this is we need to take care of this. This is the equation of the trend line and r square. And I also want to change the font to Bakersville and make it 18, size 18. Okay. Oh, now I got this here. Now it is not showing. So look at this. This is what? This is exactly what we got here. Look at the beta value, 1.2848, 1.28479 if it is rounded, 48. Alpha, this intercept, right? Vertical intercept. That's 0.0012, right? And 0.001248, right? That's exact. And r square, 0.583, or r square, 0.5829. So our regression result, of course, this trend line will obviously automatically calculate the same thing. And this r square means, think about it, not all of these, not all of these dots can be explained by this, right? But what it means is, r square is called goodness of fit, right? The fit. So that means, there's about 58% fit, right? This line That means, if there are 100 data points, 100 dots, about 58 falls on this line. This line can explain 58% of all these. Uh, so this cannot be explained. I mean, this cannot be predicted. These dots cannot be, but these dot can be predicted. These dot can be predicted when, think about it, when x is uh, always some spam holes, and it is, I don't know why. Sometimes it's even from overseas, right? Sometimes I get 30 country code 34, country code 60 something, and country code 34 is like Spain or something. And sometimes I get, country code 86, which is China. I don't know anyone. I don't have any business with China, obviously, and it's always, a spam. Uh, if it is 82, it's South Korea, and I might wonder, oh, who's called? But if it is someone I know, I would. I mean, there's caller ID, right? The name will the name will appear there, but obviously. So look, this is what trend line does, So think about it. Uh, if market return, suppose oh no 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 not, no. So what if the market return was 6.914? So what this is telling you is you will RT is a function of beta, market return, and alpha, right? And we cannot always nail it, but for example, we know beta is here, right? Okay, and alpha is this. And then suppose market return is this. What's going to be the I mean, if we don't know, right? May of 2020, we have market return data, but we don't know this. Then we want to uh, project or forecast it based on this trend line. All you need to do is beta times market return plus this, and this is what like interest. So actually, was it like that? It was close. It wasn't exactly right. It wasn't. this is actual, this is actual, this is a projection, right? Or forecast, right? So given, trend line, we can uh, make a forecast, right? So everyone got the same result? Everyone got the same result? Were you able to all graph it like this? Jasmine, very good, very good. How about other people? How about other people? Hmm? Just only one person? Uh, well, I will have to assume that you all accomplished this. If you have any questions, please ask. Okay? Now, uh, it's the time is 7:07. I think it's a good time to take a break. So let's take a 10-minute break, and when we come back, we'll come back at about 7:20ish. We're gonna apply uh, uh, this to. We're gonna apply CAPM, right? We're gonna so to do CAPM, we need treasury bill. Uh, so let's take a 10-minute break. Okay, let's take a 10 minute. All righty. So. All right, we're back. We're back. Um, okay, so I guess I better save this file. Save as. All right. So next, CAPM. Okay. So uh, okay. So we know by now. You should know that uh, capital asset pricing model is basically making determining the required return. In other words, RI stands for return on individual required return on individual stock, and it is basically RF risk-free return plus uh, market risk premium. Market risk premium is basically market return minus risk-free return, right? That's called market risk premium times beta of that particular stock I, right? Again, if you move this, if you move RF risk-free return to the left-hand side, right? It will be then RI minus RF. And the right-hand side is going to be market risk premium times beta. Okay. Now this beta is slightly different from it's different from this beta because this beta is simply the correlation between the market return and Excel's return. Okay. And it would be pretty similar, but now you have to realize, now it is. Uh, oh, what happened? What just happened? Now it is risk premium versus risk premium, right? It's the risk premium versus risk premium. And uh, we know this is market risk premium. And okay. And this is individual stocks risk premium. In our example, it's Apple's, right? Apple's risk premium, individual stocks. This beta value may be when we, so in other words, we are regressing Apple's risk premium against market risk premium, and it may actually come out similar to this. Okay, it may, but we don't know that yet. But we're gonna do that. Now, another thing is, so we need to get this data. And what is the risk-free return? Uh, Short-term T-bill is risk-free. The shorter the term may be, I mean, generally under 1 year T-bill, it's considered risk-free, right? And of course, generally all treasury securities are considered uh, risk-free. But the shorter, the shorter the maturity, the lower the risk. And you know the maturity risk. What's the maturity risk? The longer the maturity, uh, there's a risk associated with time, right? Because there can be a lot of variables that can affect uh, your treasuries return. So that's why there is a term premium, or maturity risk premium, right? Now, anyway, since we've been, think about it, all these data have been all these data have been monthly, right? These data have been monthly data. So we're gonna also use monthly. In other words, 1 month treasury bill, right? We're gonna use 1 month treasury bill uh, data. Okay, so where do we look up? Where do we go to look up treasury bill data? We need to go to Federal Reserve of St. Louis, right? Federal Reserve of St. Louis publishes all these, interest rate data and a lot of things. So we're gonna go to uh, uh, okay. I'm not gonna be using this for now. So I'm gonna. I have already bookmarked. Uh, I have already bookmarked, Federal Reserve. So, but you can you can do the Google search. It's generally called FRED. FRED is Federal Reserve of St. Louis, Federal Reserve Economic Data, and the website is. I'm not. Website address. Let me, uh, that should be big enough, right? Fred. St. Louis. All right. Everyone is there. Hello.
Yes.
Okay, Malaysia, you're the only one. How about the other people? Okay, Coral, you're all there, right? Coral, yes. Zainab, okay. Fellows of St. Louis, right? Now, the data that we want is T-bills, right? You have GDP, CPI, M2, real GDP, inflation, 10-year on M1. You can go by category. Category, uh, money and banking, finance, blah, blah, blah. Population, employment, labor markets, national accounts, something like GDP, and production and business activity, prices, international data, regular. I normally just type up, a treasury bill. However, it's money, banking, and finance, so interest rates, right? Yeah. And then treasury bills, 34 data series, treasury bill. And we want uh, 1 month actually, so 3 months. Uh, how come I don't see? Just need to see, I'll just look up from here, 1 month. Uh, if this is the one. Treasury yield 1 month CD. But this is not. Market yield on US Treasuries is 1 month constant maturity, right? A 4-week Treasury yield. Well, yeah, DGS 1 month, right? DGS 1 month. This is that's weird because I already bookmarked it, so I should see the bookmark. Yeah. Okay, so this is it. Market yield on U.S. Treasury, 1 month constant maturity. Oh, that's it. That's it. But somehow it didn't come up as I searched. So it's as long as it's DGS 1 month, DGS 1 month. That's it. Okay. And the we'll need to we'll need to customize our parameters. Frequency monthly, method end of the period, right? Because I can tell you, always end of the trading. Today's price is end of the day, right? Closing price of the day. You cannot, right? You cannot use average. You cannot use beginning. You cannot use open. You cannot use high or low. It's always, closing of the day. That data is the price data that represents today's trading, because that's the conclusion. That's the conclusion, right? So that's it. We don't need to do anything else. So and then just time period. We start from 2018, 5 years, right? 5 years. 5 years. If you click on 5 years, right? It's going to give you 2018, July 1st, 2018. And we have only July 2023. Uh, you don't have August data yet. Okay, you don't have August data because August hasn't ended. So recent 5 year, uh, this range is basically recent 5 years, most recent 5 years, right? Okay, you can save this. For example, you can save this as a PDF picture file. Actually, I took a shot yesterday. Okay, we just save this as save that. Uh, I just wanted to see only the scrap, but we'll do that later. It's not. Now we're gonna download the data. Okay, we'll click download as Excel file, right? Okay, EGS open. Okay, I'm gonna do the same thing that I'm doing. Okay, and you can save this file separately. You can save this file separately. Uh, Federal Reserve economics data link, right? Fed, stlouisfed.org, and blah, blah, blah. Um, so this is the heading. We don't need all that. All we need is date and the return. I'm going to copy. I'm going to copy that and paste it here. Paste. And I'll center the labels and on the line. And since this is in ascending order, I'm going to sort it in descending order. All right, I'm going to sort it in descending order. Select home, go to home, sort and filter, sort newest to the oldest. All right. Now, I've been telling you over and over, it would be very difficult to do this on the same computer, on one screen, on a single screen, because you have to watch and you have to do it. Okay. If you have, I've been telling you, you need two screens, right? You need two screens. And if you have a tablet, on the tablet you watch, and on your laptop or on your, desktop, uh, you do, you work on Excel. This is already in percentage. Everything is in percentage, right? Everything is in percentage. But however, I cannot use it as is because um, uh, basically, we are dealing with uh, percentage data, and if we convert this into percentages, it's going to be like 548%, right? So I'll hold this. I will label this RF and divide this by 100. And now it's going to be in the in decimals. I'll just I'll do everything. Yeah. Now then I can give it percentage there. and then always give it like 2 to 3 decimal places. 2 to 3 decimal places. 2 is good. Now I can drag it down. Okay. Now from C1 to C61, that's going to make it 61 data point, right? So we're going to be um, but anyway, all we need is this, right? So let's do the CAPM. To do CAPM, right? I'm gonna have to again, we know what this is. This is the average of the mean, right? Mean return, right? Uh, average of market return as well. Was that really like that? Only 0. Yeah, 0.3. Okay. Yeah, name of this series is DGS 1 month. Ah, yeah. Um, so, um, I don't need this anymore. And on merge. Now, so we're going to do this, right? CAPM, which is not a very difficult thing. So all I need is something like this. Oh, but before we do that, what did I do? So uh, we're gonna run regression on these two to find uh, beta, right? Um, so let me. Oh, why I'm gonna have to move everything. Oh, okay. Let me copy the whole thing and move this. here. Okay. So okay. So here, Ri minus RF. Right? App holds risk. Let me pull it up. Oh, what's going on? No, no, no. Okay, can you see this? Uh, first, just Ri. Then RM, RF. Okay, and we have RI, RM here. We're gonna, okay. Oh, because risk-free return doesn't have August data, we'll have to match it. So we'll copy from July data here. So I'm gonna, so we're not gonna have exactly 60 data points, but that's fine. As best we can. Okay. And then this, copy, and paste only values. Paste, but then I don't know why this one is. Okay. Oops. Oh, what's this? Oh, 20. What? Well, it's a little cosmetic thing, so I'm gonna take care of that later. But that shouldn't look like it. Why is it like this? Anyway, Now we're gonna what we need here is Ri minus Rf, and this one is Rm minus Rf. Okay, so this is the individual stocks risk premium, or Apple's risk premium. This one is market risk premium, which is not a difficult thing to do. So it's this minus this, okay? And here I'm gonna lock only column, right? Not the row. So uh, I'll put a dollar sign here. That means I'm locking in this. I'm locking in this column C, so that when I drag it to the right, it will still be. Uh, oh, what did I do? Uh, yeah, not there, not there. I got a lock here, right? Locking column, right? And then not not the row. So I drag it to the right. It will still be the B2 minus C2. Okay, and then when I highlight those and drag it down, I don't know why this is not. Uh, and I have some extra data here that I don't need. Um, so now, what am I trying to do? What I'm trying to do is then these two are this is y and this is x. So I'm going to run regression of y values on x values, so that the risk it will be a regression between risk premium and risk premium. I'm going to give it a slight, uh, very light color, so to know that we are uh, these are the data that we are. So we're gonna go to data. Again, data analysis, regression, hit OK, input Y range, this is Y, and input X range, this is X. Okay, and I'll give G1 as the output range, G1. There you go. Labels included, labels, right? Hit OK. And put a thick border line around it and increase the font and change the font to the one that you like. And then here, so therefore we have now, oh, we have very good R square. Now it's even 59. And our coefficients are, so this is beta. Beta is pretty good. And then T statistics are also very significant. R square, very good. And intercept, yeah, very. So there should be very little intercept. I mean, the bigger the intercept, it's good. The bigger the intercept, it's good. However, even though when you're regressing risk premium over risk premium, uh, there's supposed to be very the alpha, the vertical intercept, is supposed to be expected to be small. But if it is significantly large, then that's very good. That's what they are all after. Hunt for alpha. But anyway, T values are very significant. So these are very robust estimations. And then estimations of parameters. Now, I don't want to make it too. I want to make it close because we need to still, remind ourselves what we are trying to do. So then now let's think about it. If we want to, what we want to know is what's going to be what's the required return for Apple. So the required return will be, using this CAPM formula, right? So required return, right? Required return, I. Required return, I. And alpha. Risk-free, RF. RM, beta. Okay. Then we know RF for July, right? This is for July, right? And that's because that's the only the most recent risk-free monthly return, right? Risk-free return monthly. And for RM minus RF, wait a minute, RM minus, so I'm gonna, because I have RM minus RF, I'll just use, already I have RM minus RF. U, okay, is kind of negative, but that's, and beta, there you go. So our required return, this doesn't look pretty, but RF plus Rm minus Rf times beta times, where's times? And no, times. Can't see. Okay, times beta. So what do you get? Required return is required return on Apple is 2.477. What is this? Um, this is not expected return. This is required return. And this is what we use on, remember Gordon growth model, right? Gordon model. What is Gordon model? Price of the stock, right, at time 0 is dividend at time 1. Okay, let's do it at t plus 1. Time t plus 1. So then I'll have to plus 2 over R minus G. Now, you've seen how we calculate the growth rate. You know, you've seen how we calculate the growth rate, right? Dividend growth rate, right? And in most examples, this was given. But as I've been telling you, in reality, nobody gives you this. And if someone gives you this, how do you know if it is the correct one? Right? You should be, although there are sources where you can look up the required return, something like Morningstar, Value Line services, but they are all paid services. You should be able to, in the absence of those data sources, or how would you do that? You should be able to calculate it on your own. So this is how you find, how you calculate this required return. And that's CAPM. That's capital asset pricing model. So when we did that, I was telling you, a CAPM is a misnomer, because CAPM doesn't actually price any asset, because CAPM per se only calculates this required return, right? So that's it. That's how you apply CAPM. Of course, CAPM is a equilibrium model, general equilibrium model. So is it may it's not very, it's not really, it's not gonna give you a very exact. Uh, so does this give you the price that you get here? Is that the actual price, market price? No, of course it's not market price. What you get here is the intrinsic value, right? This is intrinsic value or rational price. Intrinsic value or rational price. Or fair value. So in other words, what that means is um, actual market price may be different. It will, of course, it will. Most of the times, it will be different from the intrinsic value or fair value or a rational value, rational price. But at least it gives you an idea. If the market price is above this, then what can you tell? Oh, it's overvalued, so time to sell, right? If it is below this, it's undervalued. It's a buy target, right? Does that make sense? Only four people now still hanging in there. So, well, I hope you have any questions? Any questions? Any questions? I guess no questions. I will. All right. So I have. I hope you have enjoyed this summer term. Right? It's not a whole semester, but I hope you have learned something very valuable. Right? And have enjoyed. All right. Have a great rest of the summer. And if you take classes in the fall, uh, have a great next semester. And I will. I hope to see you guys in the advanced classes. Okay. All right. You're welcome, Jasmine.
Thank
You're
you,
welcome.
brother.
All right. You're welcome.
Thank you,
It was
Professor.
All right, Coral. You're welcome. You're welcome, Malaysia.
Thank you,
All
Professor,
right.
for a great semester. Thank you.
All right, Brandon. Thank you. You're welcome. All right. Have a great uh, rest of the summer. And all right. Don't forget, final is due tonight. Okay. All right. So that's it for today. Uh, Stop recording and sign out. Stop recording. Oh, it's not responding. Stop recording.